Markets rallying on trade deal optimism. The US and Britain announcing a framework agreement yesterday, for example. Our guest has a message for investors. Stay focused on high-quality Canadian companies and wait for a solid price rebound in the US. We're joined by Brian Belski, Chief Investment Strategist at BMO Capital Markets. Great to see you as ever.
Well, this American got through the border yesterday, no problem, and it's great to be back. Thank you so much, and good morning, Canada.
They didn't go through your phone.
They did not. They waved me in. I just showed the BMO card, and they said, keep going.
It's great to have you here. You have slightly brought down your profit estimate for TSX stocks, but you say it's just a tweak.
Yeah, we call it a tweak of less than 5%. And I think the reason is that, much like we did in the U.S., Andrew, on April 23rd, we want to set up to underpromise and overdeliver. And it's no different, quite frankly, than what companies are doing. And the companies in the United States basically have pulled all their guidance. It's similar to what happened in COVID, except in what happened in COVID, they pulled all of their forecasts. That's different this time around. That's kind of number one. Number two is that people, I think, continue to fail to recognize that from a price performance basis, Canada's outperformed, which has been our call in print in a published research report now for 18 months that Canada was set to outperform. And we said that a while ago, principally because of the value and cyclicality of that Canada has been able to afford from an equity perspective and continues to outperform year to date. But from an earnings perspective, we know this, being at BMO now for 13 years, is that Canadian companies and companies from a management perspective actually do a quite better job than the U.S. with respect to longer term stability and more consistency of earnings. And so that's what really attracts us to Canada and has done so. And there's a number of fantastic profiles here and themes in Canada with respect to how to invest, not just banks, not just gold, and not just oil. So that being said, we want to set ourselves up from the earnings perspective to underpromise and overdeliver. While the majority of analysts in Canada have dropped their earnings, and what we have shown through our almost 36 years in the business, is that when all the analysts drop their earnings at once, it's typically a contrarian signal. It has done so. We called that in the U.S. on April 23rd, that the contrarian bottom is well in place in the U.S. Now, Canada, all the numbers are down as well, which typically portends to stronger stock market performance 12 months out.
When it's across the board from analysts, that can be a good sign.
Correct. When they all say, oh, drop it, because again, so many binary decisions have been made in terms of investments with respect to what's happening in the tariffs. Most analysts and most economists and most strategists have gone way too negative and decided to be way too negative. We take the other side of the coin, not to just be different, but our analysis shows that people have been too reactive and too negative. And typically and historically, when that happens, traditionally have a really, really good entry point.
In America, it's kind of a similar theme. You see indicators pointing to excessively negative sentiment, which means in a while we could see a decent rebound for U.S. stocks.
Yeah, we have. We have since we put that out. And since we put that report out, we've remained resolutely bullish. We still think U.S. stocks are in the midst of a 25-year secular bull market that started in 2009. Canada's come along for the ride. As America goes, so goes Canada. We have to kind of push our emotions aside from that because both countries benefit from each other. In terms of the United States, still the biggest economy in the world, still the best companies in the world. Canada's a close number 2. And so from a stock picking perspective, we think the diversified impact of the United States in terms of its index and its economy is still the place to be. And, oh, by the way, Canada has a lot of great stock picks that will benefit from the U.S. as well. So this notion of, I've been in Europe twice over the last 3 weeks, this notion of European investors are saying that American exceptionalism is over. And I think it's because U.S. has outperformed so dramatically from an asset perspective. Europe's outperformed year to date. However, I would be very, very reticent to be adding to European exposure now. And given the fact that so many people have become negative on the U.S. and the earnings impact of the U.S. we think is going to be stronger going forward. We think we've been given a great longer-term buying opportunity for those investors that have not been in the U.S.
There has been this move into Europe, and you're a bit cautious about that. We want to get to a couple of your stock ideas here, Brian. Shopify, what attracts you there? People are worried, of course, about the tariff impact on international
Of
commerce.
course they're worried. We've owned Shopify in various portfolios since 2019. Our great analyst at BMO, Thanos, just picked up coverage with a $120 price target. I'm sorry, I got the price target wrong. Anyway,
I'll check that. Go ahead.
Anyway, at the end of the day, we think this is a category killer stock. We love small mid-cap stocks in North America. This is the portal for small mid-cap companies in the world, but for the most part, North America. And we think the operating margins for this company are going to continue to grow.
Yeah, I mean, they have. I've heard at least one analyst saying that they're so big and they have such sophisticated systems in place, they're less vulnerable to tariffs than other e-commerce players.
They are. I mean, think of it, they've done such a wonderful job managing that company. It's going to be one of these companies, just like Amazon before that kind of has to grow into the multiple. And it's an exquisitely well-run company, and that's why we've owned it for so long.
Okay. Your next idea is Canadian
The
Tire.
Tire.
Whoa, you don't get more patriotic than that.
The Tire. I mean, I'm probably going to go walk around the Tire today just to smell it. I mean, I just love hanging out in Canadian Tire. No, I mean, 4.4% dividend. They hit on the operating margin side. The Canadian consumer remains resilient. We love this name. The stock from this year has been a great defensive name, but the Canadian consumer is just as resilient as the U.S. consumer, but they're a little bit more price conscious. That's why you've seen stocks like Dollarama and now Canadian Tire do so well.
Sure, I'm just checking Shopify. The price target $120 US. BMO just started initiating, and just finally, Rockwell Automation.
Yeah, so Rockwell's another one where on the industrial side, Andrew, we've learned through our back testing and analysis of industrial stocks, it's really about the operating performance. So you look at return on invested capital, return on equity, return on assets, this company continue to do very well. Automation, as more and more capacity comes back to the United States, Rockwell is exquisitely positioned to take advantage of that.
Thank you very much, Brian.
Thanks so much for having us.
Brian Belski of BMO. Coming up.